Welcome to The Explainer. Today, we are diving deep into the hidden engine of the Italian economy. It's this massive industry, that's quietly going through a huge transformation.
All right, let's just kick things off with a quick question for you. When you think of the Italian economy, what's the very first thing that pops into your head?
Yeah, I know. Italy is famous for its incredible luxury goods, its fashion, that amazing food. But there is this other sector, an absolute giant, that is quietly powering the whole thing from behind the scenes.
That's right, logistics. The whole business of moving things, storing things, and managing all those goods we love, it's a colossal industry. And right now, it is smack dab in the middle of a massive investment gold rush.
So, a gold rush, huh? Let's unpack that. Just how big is this boom really? And why is all of this happening right now? Well, the numbers here are honestly staggering. In 2023, the logistics outsourcing market in Italy was worth 112 billion euros. To put that in perspective for you, that's something like 8% of the country's entire GDP. Just wow.
But it's not just about the size, it's the speed. This sector has absolutely exploded. We're talking 57% growth since 2009. And that's been supercharged by the huge rise of e-commerce and a really strong recovery after the pandemic. But here's the puzzle. If this market is so massive and it's growing so incredibly fast, why are people calling it a diamond in the rough? Well, it turns out it all comes down to how the market is actually built. And this donut chart, it just perfectly shows you the core problem in a nutshell. The market is incredibly fragmented. A whopping 90% of logistics companies in Italy are tiny. We're talking small, often family-run businesses with fewer than 10 employees.
So this fragmentation creates a real domino effect of challenges. When you have so many tiny players, it leads to major inefficiencies, and it means new technology gets adopted really slowly. It also leads to this chronic shortage of about 60,000 skilled workers. And of course, rising costs for everyone.
And really, what this all boils down to is this fundamental clash. On one side, you have these small, local experts. They have incredible regional know-how, but a lot of them are nearing retirement. And on the other side, you've got these international giants with deep pockets, huge global networks, and a serious appetite for growth. You can see how this creates the perfect storm for acquisitions. Okay, so it seems a little messy, right? With all these challenges, you have to ask, why are global investors practically lining up to get a piece of the action? Well, the answer is that underneath all that fragmentation, Italy has some seriously undeniable strengths. Geographically, it's just a natural hub for trade between Europe and the Mediterranean. It has a world-class manufacturing base, and get this, nearly half of all logistics in the country are now outsourced. That means demand is through the roof.
And the biggest driver of all, you guessed it, e-commerce. Italian online sales are on track to hit almost 59 billion euros in 2024. Think about it. Every single one of those online orders creates this massive urgent need for modern warehouses, slick fulfillment centers, and super efficient last-mile delivery.
So let's just recap. You have this huge, growing market. It's filled with small, kind of old-school players. And there's this new wave of demand crashing in. So what's the winning playbook for investors who want to unlock all that value? The number one strategy is something called a roll-up. And it's a great name. Think of it like you're building a national all-star team. An investor doesn't start from scratch. They go out and acquire the best regional players and then merge them all into one single powerful company. The playbook itself is pretty simple, but it is incredibly effective. Step 1. You buy a solid, medium-sized company to act as your base, your platform. Then you use that platform to start buying up smaller regional competitors. And finally, step 3. You inject a ton of capital and new technology to turn the whole thing into a modern, efficient national leader. And listen, this isn't just some business school theory. It is happening right now as we speak. With so many of these family firms facing retirement, deals are speeding up. A perfect example is the recent acquisition of this 55-year-old company, Sifty Berti. The Swiss giant Planzer bought them, giving the founding family a clear succession plan for the future. And investors are smart. They're targeting the areas with the highest growth, where they can add the most value. We're talking e-commerce fulfillment,
Specialized logistics, like the cold chain for pharmaceuticals and food, the stuff that needs to stay refrigerated, and these advanced 4PL services, which are basically the tech platforms that act as the brains for the entire supply chain.
Okay, let's zoom out for a second. Why should anyone outside of Italy actually care about all this? Why does consolidating Italy's logistics market matter to the rest of us? Because here's the key takeaway. Fixing Italy's logistics puzzle isn't just a national issue. A more efficient, more technologically advanced network in Italy actually strengthens the flow of goods across the entire continent. It makes Europe's supply chain more resilient for everyone.
As our source material puts it, the potential here is just enormous. The right kind of investment can literally transform these local Italian champions into cornerstone players in a truly connected, modern European market. And that leaves us with one final, really fascinating question to think about. As more and more companies look to bring their supply chains closer to home, could this Italian diamond in the rough, with the right investment and the right strategy, actually become one of the crown jewels of European logistics?